Welcome to The Explainer. Today, we're stepping right into the mentor's workshop to completely demystify what I consider one of the absolute most powerful tools in all of trading, the Commitments of Traders, or COT report. If you're just starting out with COD data, honestly, staring at that massive weekly wall of numbers can feel a bit like trying to read the Matrix. But don't worry, we're going to break this all down together. We're going to map out 7 distinct, highly profitable strategies that are all derived from this one single report.
Now, right off the bat, let's establish a really crucial ground rule for any new student. You absolutely do not need to master all 7 of these. In fact, if you try to trade all 7 at once, it's just going to paralyze you. Trust me on this, premature complexity is the true enemy of profitability. So, as your mentor today, my ultimate goal is to help you pick just one clear path to start your journey.
So here is our roadmap for today. We'll start with the 7 distinct paths, move into following trends and reversals, and then look at trading momentum and news. After that, we'll dive into advanced macros and scoring, help you pick your perfect match, and finally, talk about mastering one strategy before you start combining them. All right, Section 1. Following trends and reversals, the foundational strategies.
Let's kick things off with our first path, trend confirmation. Now, the trick here is you don't just buy blindly, right? Instead, you wait for a price pullback to a key support level, and you only enter when the COT data confirms that the smart money is actively accumulating. We map this to a green market condition, which is a phase 2 expansion. It's a brilliant starting point because betting with the market is just psychologically so much easier. The main catch, though, is that this signal can kind of lag when you're stuck in a choppy, sideways market. Now, let's flip the script and look at strategy 2, the Contrarian extreme reversal. We actually map this one to the red zone. These are those rare multi-year extremes. You're basically waiting incredibly patiently until hedge funds are just overwhelmingly long or short, and then you bet against them. The pro here is the massive profit potential when that violent mean reversion finally kicks in. The downside? Well, you're stepping right in front of a freight train. It requires absolute nerves of steel and pretty deep pockets to survive being early.
So, I want you to ask yourself honestly right now, what kind of trader are you? Do you prefer the psychological comfort of just going with the trend that gives you moderate, fairly frequent wins, maybe 6 to 15 times a year? Or are you more of a patient contrarian who can stomach a drawdown for a massive payoff, taking maybe 1 to 3 trades a year? Your personality really has to dictate your choice here.
Moving on to Section 2, trading momentum and news, the active trader's domain. Stepping into our blue transitioning zone, we've got strategy 3, positioning momentum. How do we actually trade this one? Well, instead of sitting around waiting for a massive multi-year extreme, you're looking to execute a trade right on the heels of a huge weekly shift. Picture a sudden 8,000 contract jump in managed money. You're riding that immediate capital shockwave. It's fantastic for catching moves early, but you do risk getting whipsawed if the market is just chopping around.
For the thrill seekers out there, we have strategy 4, the news and crowded trade tactic. The execution on this one is just explosive. Step 1, you identify a heavily crowded COT extreme. Step 2, you literally just sit on your hands and wait for a major news event to drop, like CPI or FOMC. And step 3, if that news blatantly contradicts the crowd's narrative, you smash the enter button. The unwinding is violent and incredibly fast, simply because everyone else is caught entirely off guard.
You really need to weigh these 2 active approaches against your actual lifestyle. Positioning momentum, it gets you in early, giving you maybe 5 to 12 signals a year, but you've got to accept that whipsaw risk. News trading, on the other hand, gives you a phenomenal 60 to 70% win rate and super quick trades. But, and it's a big but, you have to be okay with the stress of being glued to your monitor during those volatile economic releases.
All right, let's get into Section 3, advanced macros and scoring, the analytical trader's toolkit.
Over in our purple macro shift zone, we find strategy 5, cross-currency relative value. Trading this actually means executing 2 simultaneous positions. You're buying gold while at the exact same time shorting the US dollar. But the kicker is, you only do this when the COT data shows a dual extreme in both markets simultaneously. It is a beautiful, high-probability setup that signals a crowded macro narrative, but you absolutely have to master correlated risk management to pull it off.
Next up, tailored for the orange ending trends phase, we have strategy 6, divergence trading. This is an absolute dream for you analytical pattern recognizers out there. Here's what you do. You watch for the price to make a new higher high, but you're looking for speculative positioning to make a lower high. To trade it safely, you wait for a technical trendline break to confirm that the smart money is actually exiting. It gets you in beautifully early, often before the crowd even realizes the trend is dying.
Finally, for the process-oriented system builders, we have Strategy 7, the COT scoring system. Think of this as building a master spreadsheet. You're summing up 5 different components, things like swap dealer momentum and seasonal context, and scoring them from a -10 to a +10. You only ever trade when that total score hits a strict +6 or -6 threshold. It filters out market noise like magic. The only catch is that you must religiously update your math every single weekend.
Now, these analytical methods are fantastic. They offer really robust win rates, somewhere in the 55 to 70% range. But here's the reality check. Whether you're a macro thinker holding positions for 12 weeks or a pattern technician looking at a 3-week horizon, you absolutely must have an unwavering, methodical mindset. You need the patience to just sit back and let these setups develop over a fairly long time frame.
Which brings us to Section 4, Picking Your Perfect Match, the Decision Flow Chart.
Okay, listen up, because the absolute most crucial question you have to answer honestly right now is this. How much time can you actually commit to trading every single week? Seriously, as your mentor, let me save you years of frustration here. A strategy that you cannot consistently execute is completely useless to you.
So let's break it down based on your schedule. If you realistically have less than an hour a week to dedicate to this, you firmly belong in either the contrarian reversal or cross-currency camps. Got maybe 1 to 3 hours? Then divergence or the scoring system is going to fit your life perfectly. Now, if you actually have the bandwidth to sit there and monitor daily price action, then trend, momentum, or news trading are definitely your weapons of choice.
Once you've nailed down your time limit, you want to map your chosen strategy to its specific color-coded market condition. We've got green for expansion, blue for transitions, red for those crazy multi-year extremes, and orange for ending trends. By keeping your strategy strictly locked to its specific environment, you're going to eliminate those annoying conflicting signals entirely.
Your next filter is balancing your risk tolerance against your need for action. Take a look at this summary table. You need to decide, do you crave the dopamine hit of taking 15 trend confirmation trades a year, sitting at a 50 to 60% win rate? Or do you prefer the zen-like patience of waiting for just 3 massive extreme reversal setups a year that can win up to 65% of the time? Choose the rhythm that actually lets you sleep soundly at night.
Almost at the finish line, Section 5, Mastering One, then Combining the Hybrid Horizon.
Now, before we look out at that horizon, you need to hear my golden rule. Do not, and I mean do not, attempt any of these hybrid methods until you have a solid 6 months of profitability with a single, standalone strategy. But once you do, you can start building some incredible conviction. For instance, imagine pairing a contrarian extreme reversal with your scoring system. If that reversal triggers and your score hits a strong +6, you can confidently size up your position. Or consider what I like to call a precision hybrid. This involves using trend confirmation to firmly lock in your safe directional bias, and then deploying divergence trading to pinpoint the exact surgical entry point on a pullback. It's essentially taking a safety-first approach and combining it with absolute precision timing, making sure you enter right before that next leg begins. At the end of the day, the best strategy is simply the one you can actually execute week in and week out. Execution consistency will always beat a theoretical edge. So I want you to pick just one of these 7 paths today. Master it, and I promise you, this data will become your greatest asset. So I'll leave you with this. What kind of trader are you going to become? Which one of these powerful paths will you commit to mastering first?